This is the fourth video that I have done on super micro computers, trying to explain what has transpired and what is likely to transpire in the future. And my thumbnail of today is accurate. They have entered into some loans, what I can only call payday loans, that will give them the potential to survive the future and the past that they have created. And I intend to do at least 2 more videos to take you through what I think is going to happen, how these payday loans are going to materialize, and how it is going to affect Supermicro's future earnings and their stock price relative to the situation that they find themselves in, not only relative to their ability to make the product that the hyperscalers and NVIDIA need, but also how to deal with the financial situation that they have put themselves in the future, or for the future. Now, I think it's important, though, before we get into that, because we've got some time, that one of the key elements is going to transpire on the 25th of this month. This is when they are required to make their 10K and their 10Q filings to the SEC and avoid delisting. They get delisted, there's going to be a shadow that's going to be put upon them, and much of this will not matter. But let's first of all understand who they are and what they do and what has happened in the past. They put the boxes together, the servers that contain I believe it's something like 3,000 parts, weigh something in the neighborhood of 72 pounds, and they contain the GPUs and the CPUs that are going to run artificial intelligence and be in these data centers in the future. And there is an overwhelming demand for them. But what we need to recognize is what has happened in the past that has thrown some shadow on Supermicro. From 2018 to 2020, they were delisted. You could not buy their stock on the NASDAQ exchange because of some financial failings, failings to submit the 10Ks, and then some questions, widespread accounting violations created by their CEO, Howard Hyde-Shanmira, that basically said that they were delisted for 3 years, and their improper financial practices. What it was accused they were doing was basically putting forward some sales that had not occurred yet, or actually delivering some incomplete products so as to register sales that should not be on the books. They got caught for that, and they were fined $17.5 million for it. They were then added to the S&P 500 in March of 2024, and then added to the NASDAQ 100 in July of 2024. So all this past had been pushed aside and said, this is a strong company. They had the endorsements of Jensen Huang from NVIDIA, so everything went extremely well. And then on August the 27th of 2024, Hindenburg Research accused SMCI again of accounting manipulation, sibling self-dealing, and sanctioned evasion. So if you go through that report, you'll find that they did that Hindenburg, who is run by a gentleman by the name of Nathan Anderson, did a 3-month investigation and found that they were involved again in improper accounting practices, in improper recognition of sales, multiple accusations from current and past employees of illicit activities, customers complaining about the quality of the product that was being delivered and the failure rates that were happening. They were even accused of backdoor shipments to Russia after the Ukraine war to boost their sales deals and against basic U.S. sanctions on Russia. And then there were some reports in this this short report that Hindenburg put out indicating that many of their customers were switching to Dell. That all took place, as I said, that was in August 27th of 2024. In the meantime, in January of 2025, Nathan Anderson shut the doors on Hindenburg research. Basically, my understanding is he did that because there wasn't a short market. There wasn't the opportunity that he thought would be there to make money, not only off of Supermicro, but the whole short market. There was just, I don't know if it was too much money or not enough money in the market to facilitate his business. He did not file bankruptcy. He shut his doors down. Then on August 29th, that was August 27th. 2 days later, Supermicro failed to file their 10K. Then on November the 13th, approximately 2 weeks later, they failed to file their 10Q. So a big shadow fell over Supermicro, the price went down, and a lot of questions were being asked. As a result of their non-filings, the SEC gave them an extension through February the 25th, which is about a week from now. This is a pivotal day. This is what we need to see what is going to happen. Are they going to make the filing, and are we going to get a new view of the books? On November 20th, SMCI paid off its outstanding loans that were held by Cathay Bank and Bank of America. It was not disclosed, at least as far as I could find, what were the amount of those loans, but it basically said that they paid those loans off. Now, if you go to the latest filings of Supermicro's books, those loans still, or some loans still appear there. There is a loan that appears on their books of $1.771 billion of long-term loans and short-term loans of $402 million. I am of the opinion, or the understanding, that this is what they paid off, the $1.77 billion that they had secured loans for from Cathay and Bank of America. So that's what we know at this point. Now, I should add that 1.7 billion long-term debt in 2024 was an increase in long-term debt from 2023 of 120 million. So their long-term debt from 23 to 24 went from 120 million to 1.77 billion. Okay? Then their short-term debt, which was in 2024 at 402 million, in 2023 was 170 million. So that almost, it more than doubled. So that was their books relative to 2024, the last time we've seen their books. Now, also on their cash their cash flow report, they indicated that in 2024 they raised cash from financing to the tune of $3.911 billion. So we don't know what the long-term debt is at this point because they haven't filed their 10K. But if we surmise, it's either 1.77 billion as a low number and as a high number as high as 3.911 billion long-term, and short-term as high as another 448.3 million. So that's the financial situation that I can ascertain at this point. What's happened more recently, last week on February 11th, 2025, Supermicro put out a press release indicating that they were restructuring their loans and that they were restructuring a past loan that was a 0% interest loan. Now, ask yourself, why would someone lend you money, and we don't know how much, for 0%, and then come back on February the 11th and restructure that because they have a premium attached to it. What that means is I'll loan you so much today at zero interest, but at some time in the future, you're going to pay a premium on top of that. In other words, what you borrowed plus, but I won't charge you any interest. Well, on February the 11th, whoever probably financed the loans that they shut out from CAFE and Bank of America said, for some reason, we're going to alter that, and now you're going to not pay 0%, you're going to pay 3.5% on that loan. We're not sure how much it is. Is it 1.77 long-term debt that we saw on their books, or is it more like the 3.911 billion that we saw on their books that was raised from financing in 2024? We don't know that. I'm going to assume it's the smaller number. I'm going to assume it's the 1.77. Now, again, it has a 3.5% interest rate attached to it. They are obligated to make payments on the interest twice a year, in January and July. And thus, we don't know if that's based on 1.77 billion or 3.911 billion, but we're assuming 1.77. Now, also, it says that they will pay that off in 2029 with a premium of 105%. To make that easy, they are going to make a payment in 2029 for twice plus 5% what they borrowed, whether it's 1.77 billion or 3.911 billion. We don't know. But in sometime in 2029, probably February, because that's when this was initiated, they will have to come up with either, what would that be, $3.4 billion or just shy of $8 billion to close that loan out, or get new financing. So that's what I have ascertained from reading the books. Now, also on that day, they came up with a second convertible loan for an additional $700 million, which has a 2.25% interest rate and a 50% premium. So again, this time, twice a year, they have to pay interest through 2028, and then in 2028, probably in February, they will have to come up with $1.4 billion to pay off the $700 million loan. Okay, now, again, is this a disaster? Is it a payday loan? Yes, it is. But do some people, because of their circumstances, need the money now to fund earnings in the future, and they can easily pay off the payday loan? Yes, that is a possibility. But this is what we need as investors, is to analyze based on the earnings that they're projecting. And they just had an earnings call. So we know what the earnings they're projecting. We know what their PE ratio is. If we can create an amortization schedule based on their payments and their income, we can predict what their circumstances will be when they have to make these two big payments. One in February of what would that be? 2028, and one in February of 2029. If we can do that, we can, with some degree of certainty, predict what their situation will be when those loans fall due, and then make a decision of, is this a good investment or not? Now, do I think I'm the only person who has figured this out? The only person who has spent this past weekend crunching the numbers, reading the documents, interpreting the documents, and coming out with a decision? No. But again, I would ask you to look at the market And last week, the market has bid up the price. So I'm betting that Wall Street believes this can come to a good fruition, or they're setting a trap. I don't know. That's what I'm going to do in the next two videos, is go deeper into what I see happening at Dell, what I see happening at Hewlett Packard, what I see, what I can find about their customers' responses to the quality of their product. Their Supermicro is proposing to open a third facility in Malaysia later this year. I need to find out, is that still on the table? Is that going to happen? That will give me some confidence as to whether or not what they're trying to do is going to have a good result or a disaster. Is there a trap down the road that we have to avoid? So, in summary, we know that they've gone through some bad times. We know that they have some questionable financial practices. We know that Ernst & Young walked away from them, but they were replaced by BDO of USA, which I understand is a reputable financial institution. They have a deadline on February 25th, so we must see if they make their filings for their 10K and their 10Q as they were told to. We know that they have secured the financing, and that someone who understands their books as well, if not better than you and I, have confidence that they are going to make these payments, and we do not know what the size of those payments are, and we probably won't know what the size of those payments are until after February the 25th of this month. And then further analysis, once we know the amount of those loans, can project out what is likely to happen in February of 2028 and then in February of 2029. Okay, that's how I've spent my weekend. And I thank the President's Day that I got an extra day, because this is deep. There is a lot to this. There will be a lot more that will go into my video tomorrow that will be focused more on not what's happened in the past, but what is likely to happen in the future based on the companies, Supermicro's, released projections of what their earnings will be in 2025, 2026, 2027, 2028, and 2029, and how their financial obligation matches up with that. Okay, that's coming in the next two videos. Now, what I also will share is that on my website, Best of Us Investors, I'm going to, as I put this amortization schedule together and the total anticipation of what is going to possibly happen, and the updates on it will be on my website. And it will be there as soon as I come up with it. So if you want to be a part of this, you come to Best of Us Investors and you sign up for our gold platform. Now, up until yesterday, you could have had a 14-day free trial, but that's no longer available. Why is that no longer available? Because this in itself will make a difference in your life if you play it right. If you play it wrong, it will make a very big difference in your life. If you don't play it, it will make no difference in your life. But this is what I do. If you feel this holds value to the tune of $19.95 a month, go to the website, sign up, then show up for our Friday Stock Talks, where we'll dig in deeper, where you can ask questions. You'll be able to go to our Discord. I have an office there. You can ask me questions. I answer questions that are asked, and you can step into a totally different league of investing. The league where you know what you own, not only today, but tomorrow, 3 years, 4 years, 5 years from now. And now you can make an informed investment decision. I'm Kerry Grinkmeyer, I'm a retired financial advisor. I ran the largest financial planning practice in the Ameriprise system. I have other reasons why I'm doing this, and the biggest one is to help you make better investment decisions.